We're going to learn today about condos and the requirements that the lenders have for any buyer buying a condo. And what is it that you need to look at as a realtor before you even put an offer? And what also is the process that you need to know that your buyer is going to go through with a lender? Okay. So the agenda of today's agenda, we're going to look at a few documents. One of the documents we're going to be looking at is a full condo review, a limited review, an appraisal waiver, an FHA condo was required, approved condo list, and lenders that have no requirements. Right. So the first thing that I want to show you is that you need to understand that whenever you have a client or a buyer purchasing a condo, right? You need to understand that the condo project has to be approved by the lender in order for them to be able to lend money, right? They want to make sure that the condo has everything they require for them to approve it. Now, when you have a buyer that is buying a property with a minimum down payment, a condo in this case, with a minimum down payment, the lenders are going to require a full condo review. Okay. When your buyers put in 25% down payment or more, okay, the lender is going to require a limited review. All right. So if you have a buyer that has very minimum down payment, you have to make sure, okay, that the condo project is going to get approved. Because the lender is going to have you do the following. I'm going to show you right now is a full condo review. Right? A full condo review, when the client finances more than 80% loan to value or puts 20% or less on a purchase of a condo, the lender is going to require this full condo review. They're going to want to look into the condo docs, which are the bylaws, the rules and regulations, the articles of incorporation. They're going to look at everything and much more. They're also going to ask for a document that is called a condo questionnaire. Give me a thumbs up if you're able to see my screen real quick, please. Awesome. So on this condo questionnaire, as you can see here, it's a 3-page document. And it's a document that the condo association has to fill out and send back to the lender in order for the lender approve this project, right? And you can see they ask questions, about the project, the size, if they have any units with 400 square feet or less, if they have any timeshares, all right, they have any deed restrictions. And any of these answers may make your loan not get approved and not approve the project. And then your client has to go out and get a new condo, right? But that's why you need to know these things, because before you submit an offer, you need to ask a few questions. I'm going to ask you to write these down, right? But as you can see here, they ask a lot of questions about the project. If the project's been completed, it's been newly converted, or has been gone through a rehab. But also, one of the most important questions they have here, if there's any unit owners that have been delinquent more than 60 days, okay? And what happens if the lender forecloses on any unit, how many months they have to pay for the association dues back owed money, All right. But one of the most important ones is this one, number 3, which says if the association has any pre-litigation, pending litigation, or active litigation against them, or they are suing somebody else. And they want to know this because if they're getting sued, right, they want to make sure if their insurance is going to cover the lawsuit. And if not, that lawsuit could become a special assessment to all unit owners. So for example, if the lawsuit is for, discrimination, let's say, and it's a $10 million lawsuit, and the association doesn't have enough money to cover the lawsuit, and or the insurance company that they have is not covering the lawsuit, guess what's going to happen? The homeowners will have to pay for that lawsuit, right? It's a community or expenses that association has, right? The unit owners pay for it. So if it's a $10 million lawsuit and they settle for $5 million, they have no money. Guess what? Every unit owner is going to have to put part of that money as a special assessment. So the bank wants to know that if this association has a lawsuit or not, and if it's covered by the insurance policy they have or not, because this could be a hardship for you, the buyer, if this ever happens. Because if he has a special assessment, there's a big possibility that they won't be able to pay the mortgage, or they may fall behind the mortgage, right? So this is very important to ask always. One of the questions you want to ask the realtors when you're going to show a property, you're going to put an offer is, hey, write this down, guys, okay? It's very important. Is the association has any pending legal lawsuits or any litigation, or any mediation? Do they have any lawsuits at all? Yes or no? Does the association also have 10% in reserves? So let's say that the association has $1 million in expenses a year, right? They need to have $100,000 in reserve from the bank account. They need to show that on their budget. Because the bank knows that the association is not financially healthy, the same thing is going to happen. Let's say they don't have reserve for roof repairs, or they have any reserves, and a hurricane comes, right? Or they have to change the driveway. So the city came by and they looked at the whole drive parking lot needs to be changed. And to change that parking lot is going to cost $500,000, right? Guess what? If they don't have the money, who you think they're going to go after? They're going to go after each unit owner. And they're going to ask for a special assessment. And then each unit owner is going to have to pay that portion of the $500,000. The same thing could be with a roof, windows. One big thing that happens on condos is that the balcony, after 30, 40 years, it starts to deteriorate. It needs to be repaired or replaced, right? Because they start to fall out. They start to break. And the association has to repair it because it becomes a hazard. If they don't have money reserved for that, guess who's going to pay for it? The unit owners are going to pay for it. So the bank wants to make sure that, number one, there's no litigation or pending litigation, any lawsuits. And number two, also they want to have an idea if the association has a 10% in reserve of the annual expenses. Something else that they want to know over here, as you can see, as ownership information, they want to see how many owners, occupants live in the property, how many are second home owners, and how many are investors. And you may say, what do they care about that? Well, it's none of their business. But guess what? They do care. Because if it's a community that has a high concentration of investors, meaning that tenants are living in these properties, It's very common that those properties not well maintained because normally tenants don't really take care of the properties most of the time because they have no ownership. You know, they don't own it, so they don't care that much, right? So normally what happens if you go around on communities that they allow rentals within the first year, most of those communities, you know, they're not really nice, right? And it's because there's no homeowners there fighting for their community or complaining or wanting things to happen. So the lender wants to know if there's a high concentration of investors, because that may affect the value of the property as well. That may affect the community. That requires probably more repairs, more maintenance, because the people don't care, right? So these questions you need to ask always to whoever, all right, this has a listing, or if you have the listing, those are questions you must ask as well, right? You must ask if there's any litigation. Write these down, guys. I'm repeating this so you can write it down. If they have 10% reserves, right? If there's a high concentration of investors in the building. Always request the bylaws, the rules and regulations, the articles of incorporation, because you need to give that to the buyer. And if you're representing the seller, you need to get that from the seller always. But if your client is financing 80% or more of the purchase price, you're going to need this full review that I just showed you right now. And you will also need to submit to the lender the same documents, the bylaws, the rules and regulations, the articles of incorporation, and this document that I just showed you right now. So as you can see, any question here may just make your file go south. So you must understand what you need to ask before you move forward in any deal, all right? So you can see here, they also ask for insurance information. They ask how the association gets the bank statements. Man, they ask about everything, you know? And the association, obviously, once you send this to the association, they're gonna charge the client for this document. Some associations charge $250, some others charge $500, you know? But you have to get this document whenever a borrower is buying a property or financing a property over 80% loan to value, all right? Any questions on this before I move to the next one? All right, good. All right, so the next one that we're gonna see is called a full condo review. It's called a
Yeah, I have a question.
go ahead.
How you doing? Good morning, everybody.
Good morning.
So when you were talking about the 25%, the full review, the limited review, that's given me the impression that now they don't have to have 25% down to buy condos.
That's correct.
Okay, very well. So what is do they have also, are they possibility for them to qualify for FHAs as well?
Yeah, we're gonna talk about that in a second.
8.5 down. Okay.
Yeah. Yeah. You don't have, you can get a loan with a full review, right? With a full condo review with 5% down payment.
5% down payment.
Yes, but the condo project has to be approved. Anything over 80% needs a full review.
Do we have a package? Do we have a package, Catalina? Does Catalina have a package that we can use when we are sending, when we are dealing with the, whether with a seller or a buyer? I mean, not buyer, but seller, to request that if they don't have it in place?
Well, what you need to ask is the right questions. And every condo whether you are representing the seller or you're representing the buyer, you need to ask always for the rules and regulations, the
Yes.
bylaws, the articles of incorporations, the question and answer sheet, and also the budget. Always, right? So you always have to ask for those documents, whether you represent the buyer or you represent the seller. And those documents, you'll be able to see they have the 10% reserve, for example. You're going to find out the rules and regulations.
So basically, that's what compiled the limited, the full review.
Correct. The lender's going to ask for all those documents I just mentioned, right?
Mhm.
And they're also going to ask for the condo questionnaire whenever you finance more than 80% of the purchase price.
All right, cool.
Okay, good question. Now I'm going to talk about FHA in a second. All right, thanks, Osnak.
Pleasure, buddy.
All right, so the next one we're going to look at is a limited review. All right, what's a limited review? Well, limited review is when the bank is not going to ask for the full condo questionnaire. They're not going to ask for all those documents we mentioned already. Okay, why? Because a limited review, for you to get a limited review in a condo, you need to put 25% down payment or more. Okay, why? You say, well, what's the difference? Well, the difference is that the lender has less risk. In this case, you have more money vested into the property now. So the bank is always measuring risk. That's the whole purpose how they lend you money, based on risk, right? So when you put 25% down, their guideline says, okay, I don't need to see all those documents that we just spoke about. I don't need to get a full condo review, but a limited review will be sufficient, right? And let me show you what a limited review is. And I'm saying, if your client's going to put 20% down, try to get him to put 25% down, which is 5% more, because it's going to make everybody's life easier. If you're representing a buyer, a seller, and they're going with 5% down payment on a condo, man, you better make sure that your condo is going to get approved. Otherwise, you're going to put your client into a process that you cannot even sell the property. So know this ahead of time. Know ahead of time when you list the property, hey, this property is not that doesn't have any reserves, has litigation, you need to put 25% down, right? We had a condo in Miami. Man, it took us almost 8 months to sell, and how long it took us. But the condo had a lawsuit against the developer. It was a brand new condo. And when the association took over possession of the building, it was handed over to the association. The association hired a adjuster, an insurance adjuster. And the insurance adjuster went through the whole building and they found cracks, they found screws missing, they found that the AC platform wasn't correct, they found water intrusion into this little wall. And man, that was a headache for my client to sell the property, even with people putting 25% down, right? Some lenders, because of the loan amount, they may require more conditions. So is your job to really figure out a way that you're able to sell the property or get your client to a property. Another option that just came to my mind is that you can do a piggyback loan. You can get the first lender to give you the 75%, and then the second lender to give you another 10% or whatever amount. Okay, and I can help you with that as well. Because most likely the second lender is not really going to care about the condo. And the first lender, because you put in, they're only lending you 75%, they don't care about the second loan. So that's another option, a piggyback, okay? Which is the first regular loan, and the second is a HELOC or second standalone loan, all right? So the first one, 75%, and the second one could be 15%, right? And whatever percentage, if your client doesn't have the full 25%. Make sense? For more information, let me know on that. I can always get back to you on that to give you the guidelines, but a piggyback loan is another option. But if your client can put 25% or more down payment on any condo, is the best thing to do. I'm going to show you why. Because the requirement is so minimum, right? Look at the requirement they have for this. Look at this. Look how many questions they're going to ask. They're going to ask for, does a condo project contain hotel, motel units, houseboats, timeshares, or segmented ownership units? Is there any mediation, pre-litigation, or pending? If yes, attach documentation regarding litigation from the attorney. So these are the only two questions that the lender is going to request if you put 25% or more. But look at it. The question they're concerned about litigation. They're no longer concerned if the association has money in the bank or not, right? They're more concerned now about any lawsuits. And they want to know about a lawsuit. If the association is suing somebody, they may approve the loan, but they need to go through a committee of the bank to see if they can approve or take the risk of lending the money. So always keep in mind that not always because the clients put in 25% down payment, all right? If they have a lawsuit, the association, the file may get denied and the condo obviously not get approved by the lender, right? But look how easy this is for 25% down payment. Two simple questions. I love it, right? So you always must do your homework, ask the right questions. Whenever you put an offer, ask, the association has 10% in reserve. They have any litigation, right? And with that answer, you know if you want to waste your time or not on any property they're going to put an offer on, right? Any questions on this?
I have a question.
Hello, Susan, go ahead.
Hi. So litigation, it doesn't matter if it was not while the new owner comes, the owner automatically adopts that litigation?
Well, the litigation is against the association, right? So
Yeah, but like if the new owners are not there or they weren't at fault or whatever it may be, the association, they automatically adopt that.
Everybody is, because it's like, you got to understand that the association, the unit owners are like one, right?
Yeah.
So even though the change of ownership happens, correct, that new owner might be still liable for that lawsuit that might happen if there's any special assessments, right? In the same way, the lender, you know, he indirectly might be not liable, but the buyer may have a hardship if there's any special assessment because of the lawsuit. Make sense? So that's why the lender wants to make sure that if there's any lawsuits, what they are, and then what the liability may be for the borrower if he buys the property, right? Because if it becomes a hardship for the borrower, most likely he may be late in his mortgage payment. And the lender doesn't want that. Makes sense?
Yeah.
All right. My question. Actually, I have two things to say. In regard to what you just explained, Cesar, you know, I have the chem license too. With the condo, if there is money that has to be spread, it's not against a person, it's the unit. That's why when they have an increase, if there is less unit occupied, the fees gonna spread among those people. The more people that live in that condo association, is the less money they will be paying. But whatever it is, everybody gonna partake. Everybody gonna participate in that. So now, I'm sorry, you want to say something? Go ahead.
I'm not. The word "living" is I think is incorrect. Either you live there or not, but you're a unit owner, you're gonna have to pay. Whether you live there or not, I might live in China, when in Canada, but I'm still that unit owner. And there's any assessments, special assessments, me as a
Yep.
unit owner, I'm liable for that. Yes.
Correct.
Just rephrasing what you said. Mhm.
Okay. Now, now you're talking about piggyback. You said.
Yes, sir.
Does that mean the buyer will have can apply for two loan to purchase that condo,
Yes, correct.
and then is it possible? Will it possible, or is it going to be easy for them to be qualified? Two lenders qualify to, qualify him or her to purchase that condo.
There's no such thing as an easy loan. Okay. Just know that. So when you have two lenders, now you have two separate banks underwriting a loan. One lender may require something, the other lender may require something different, right? So it just is a lot of more work, for the loan officer. But is a way that you can get into a property if your client does not have all the money.
Okay, if we encounter something like that, as you mentioned, for example, if the person they already approved for whatever loan they approve, would Casalina give them the second loan, which is the piggyback?
Absolutely, we can get them to piggyback. Yes, if they qualify, of course.
All right.
Cesar,
Yes.
good morning. I have a question.
Hey, Giovanni.
All right. Let's say that we have lawsuit against the HOA because of a special assessment. But let's say that my client, he pays, he's part of the special assessment. Is there any problem with the bank, the lender?
Let me see if I understand your question. You're saying that if there's a special assessment,
Uh-huh.
okay, if the client is responsible for a special assessment.
Now, let's say that the owner of the condo, he pays for his part of the assessment.
Mhm.
And but the building still have, the other owners, they have to pay for it. I'm not sure if they did or not, but you did your part. Like, my client, he pays for his special assessment, but there is a lawsuit against the association. Is that going to be any problem to get a loan from the lender?
It might be, yeah, it might be.
Even though he pays for his special assessment?
Well, the one you're saying two different things, if I'm mistaken. You're saying there's a special assessment and there's a lawsuit,
Mm-hmm.
right? A pending lawsuit, correct?
Mm-hmm.
The lawsuit, if it's a pending lawsuit, this still hasn't been determined what's going to happen with the lawsuit, who wins or who loses, and what's the amount of money if they lose, right?
Mm-hmm.
So the lender, when they know there's a lawsuit, correct?
Mm-hmm.
Right? He may say, let me find out what the lawsuit is about. He's going to ask for the lawsuit paperwork, if you can see here, send documentation regarding the
Mhm.
litigation from the attorney.
Mm-hmm.
So they, at their discretion, they're going to find out that based on the documentation submitted to them, if they want to lend the money in the property or not. Now, if there's a special assessment, right, they don't care about that. But they will use that special assessment if your buyer is going to pay for that, continue paying the special assessment as part of their new liability, part of the new payment, right? So it's very important that when you submit an offer, your condo addendum, okay, and I'm glad you bring this up, is on the condo addendum, you ask the question, or you say buyer or seller to pay for any special assessments in full at closing, or there's a second option. If there's installment payments on any special assessments, the buyer will continue paying those special assessments, okay? And that's something you do on the negotiation of your contract on the beginning. And that's also something you need to ask any listing agents. It's a good question. I'm glad you brought that up. Is that, hey, is there any special assessments, right? And also on the condo addendum, there's a space or a clause or an area where they have to tell you if any special assessments have been levied or approved. Okay, and they have to put that in writing. Okay. So go and read your condo addendum, guys. It's very important that you do that.
Thank you.
You're welcome. Anyone else? All right. Something that we also seen a lot is that we are seeing appraisal waivers on condos and on single family homes too, actually. Because the value is going up and because people put in large down payments in this case, or when anybody puts a large down payment in this market, when property values are going up, the lender through an automation system, they know that, you know, the value is there, correct? And because the buyer is putting a large down payment, the risk is less for the lender. So they give the consumer an option for them to waive the appraisal, meaning that they do not have to order an appraisal, which allows the consumer to save almost $600, $550 or so. Okay, but there's also a caveat. There's also a condition. When your client selects to have the appraisal waived, the lender is going to require a different condo questionnaire. And let me show you how that looks. Okay, and they're going to request a different condo questionnaire. And here it is. As you can see, it's only a 2-page questionnaire versus the first one was like 4 pages, I think. Right? And there's very few questions, obviously. But as you can see, they ask if there's any timeshares, right? Any recreation amenities that, like golf courses, which people have to pay up front, memberships, stuff like that. But also you can see here, once again, in yellow, highlighted, they asking if there's the party of mediation, pre-litigation, pending litigation, active litigation, or the sponsor, developer, is a party of the mediation, litigation, etc. You get it, right? If the litigation exists, provide a copy of the complaint, as well as the letter from the association. If the insurance company or the lawyer stating the insurance is providing the defense. If the insurance is covering the company or its lawyer stating that the insurance is providing the defense, if the insurance is covering the losses, and one of the following, the full claim amount of the case, a range in which the claim amount may sit in, assurance that the potential claim amount will not exceed the policy limits. So they're saying, okay, if there's a litigation, there's a lawsuit, and the insurance company is paying for it, is covering it, I need a letter from the attorney, or I need something from the insurance company saying they're going to cover it, and it's specifying that the claim does not exceed policy limits. So they cover for $1 million and the lawsuit's for $500,000, that's okay. If they cover for $1 million and lawsuits for $5 million, that's an issue, right? So once again, you can tell how important to them it is to find out in litigation, regardless of your down payment, right? The second question again is, how many units are sold enclosed in the building? How many are and through a bona fide sales contract, all right? And how many are owner occupants or second homeowners, all right? And this is a document that they're going to require in a condo when they're giving the consumer, the borrower in this case, the opportunity to waive the appraisal. Okay. In this case, it's pretty good because number one, your client saves money. Number two, you're not at the mercy of the appraiser if the property going to come at value or not. You know, with these prices going up, sometimes people put offers, the offers accepted, and they're overpaying for the property. So it releases that stress if the property is going to appraise or not. All right. But once again, they're going to still ask for a document like a condo questionnaire, an appraisal waiver project questionnaire. All right, guys. So always remember that you're going to need these questions. Always ask these questions to the listing agents. Any more questions before we move on this document? No? All right. So the next one we're going to look at is FHA condo. Now, consumers can buy also a condo, an FHA condo. But the condo has to be approved by FHA. And unfortunately, in today's market, most condos are not approved by FHA, condo projects. They also got something called spot approval, where the unit gets approved by the FHA, but the lender has to go through a process of approving that condo. And it's not as easy, okay? And back in the days, a lot of lenders used to help in the process of getting the project approved for an FHA. But now you don't see that anymore. And I think it's kind of unnecessary when you have a conventional loan with 5% down payment, right? The beauty of FHA is the FHA is more flexible on the terms and conditions for the borrower, right? But unfortunately, in today's market, you do not see many condos being approved by FHA. But if you want to find out where to get that list of condos, you go to this domain name here, right? And this domain here, okay, I'm going to put this in the group over here in our chat. This domain here, you go there and you can either look by the state, the condo name, I'm sorry, by the state, the county, right? All right, the condo name, the city, by zip code. All right, you can look by the status, approved, expired, rejected. All right, let's look approved. And then we hit send and let's see what's approved. All right, there's a few of them. Wow, that's pretty cool. All right, so as you can see here, these projects are approved for an FHA loan. I'm not too sure why it shows NA here. Is it perpetual? Which I doubt it, right? But now you see this here, the Venetian condominium, or the hallmark of Hollywood, Cobblestone 2, Castlewood townhomes, condominiums in Coral Springs. So this is pretty cool because if your client has low scores, right? Don't have too much money in the bank, right? The file, the mortgage file is not so strong. They only have minimum down payment. They need money for closing costs. That FHA is a great product. FHA is a great product for single family homes too. I love FHA. But now, as you see this list, you can go here and put a client of yours into one of these projects with a minimum down payment of 3.5%. And they can get back up to 6% back on closing costs from seller assistance, whether conventional does not allow it. Okay, conventional max for the minimum down payment is 3%. Here is 3.5%, and you can get a gift, right? So FHA is great for new home buyers or people that, you know, that doesn't have too much credit or credit scores are low. You can get FHA from 580 scores. Okay, and now you can get your client into a condo in Coral Springs, Pembroke Pines, Hollywood, which is great. All right, so I shared the link with you guys right here on the group. I suggest you click on it and you put this as a bookmark. This is something you must have. Okay, nevertheless, out of curiosity, let me see Palm Beach County. Let's see what's out there. Palm Beach. Wow, that's awesome. Delray, Lake Worth, you got 4 more units. This is pretty good. I haven't seen this in a long time. I'm surprised, actually. Dade. Let me see. Miami. All right. 6 or 7. That's pretty cool. Aventura, look. In Aventura, you can get a client to buy a condo with a 3.5% down payment. Cutler Bay. Guys, this is pretty awesome. I think this is amazing. This opens up a door for you guys to be able to advertise even in these condos. Okay? Do an ad on Facebook. Buy a condo for 3.5% down payment. All right? Focus on this community. Send postcards. Say, hey, I can get you a buyer. All right? At 3.5% down payment if you list your property with me. Or if you have a loan, if you're a mortgage broker, like some of us here are, you can call the listing agent and say, hey, man, I can get a loan for your property with 3.5%. Just put me as your preferred lender. These are great opportunities, guys. I hope everybody's paying attention. All right? So once again, save the link on your bookmark on your website, on your computer, I'm sorry. Any questions before I move to the next topic?
No.
All right, I'm glad everybody's paying attention. Now, let me go to the next one. No condo requirements. Here in the office, we have a bank that does not care about the condo at all. They don't care if they have money in the bank. They don't care if they have lawsuits. They don't care how many people live in there. They don't care if it's rented 1 time a year. They don't care about nothing. And it's a great program. It's a great lender. I love it. But obviously, the down payment is a minimum of 15% down payment. But the catch is because it's a subprime lender, the rates start around 6.5. They can go up to 9%. Okay. But this is also an opportunity for anybody that is trying to get into a condo they love, like the one I had on Water's Edge, Miami. This condo was a 3-bedroom condo with views of the water. It was beautiful, just beautiful. And there's a way for somebody to get into one of these properties. Obviously, the rate is high, but rate is based on credit. If they got good credit, they can buy this condo. And they can even buy this condo if they're self-employed with a profit and loss statement only, no income verification. Also, if your client is not a legal resident, alien resident of the United States, if he has a tax ID number, he can buy with a tax ID number. and no income verification, with a minimum down payment of 15% or 20% down payment, and no mortgage insurance also, no MI, okay? So this is also an amazing way that you can get people that unfortunately are undocumented, but they file taxes with a tax ID number, and they don't qualify for a house because they're too expensive. You can get them into a loan, into a property, right? I do this loan a lot, you know, so this is a great opportunity for you guys also. To know there's product out there for people that unfortunately they cannot go to a regular Fannie Mae or Freddie Mac or FHA loan, right? You guys have any questions on this?
Cesar, is this new, the no condo requirements?
No, this is not new, but this is only with one lender.
Okay, and
This doesn't care.
is that easy to get it, or
Super
if
easy.
you have 15% down?
Yeah, it starts at 15% down, depending if you're gonna put it down, if you're gonna show income or not. All right.
Okay,
There's certain guidelines for that. But then if you don't, let's say you are self-employed and you don't show all your money, all right? They will accept the profit and loss statement prepared by an accountant. Okay, with 20% down payment. And they don't care about anything.
okay.
It's a really good product. I do it a lot. I do this loan a lot. And they're easy. You know, it's a great product. I love it.
Could be a good opportunity to get the property, and even if the interest rate is higher, let's say in a couple years, could be refinanced, right?
Absolutely. Absolutely. So let's say in the case that somebody is here, unfortunately, undocumented, and down the road they get their, you know, they become U.S. residents, right? Legal aliens. They're able to obtain financing and refinance that afterwards.
Wonderful.
Anybody else? No one? Well, right on time, like always. If you guys have any questions, you know, that guy with the beard is not me because I got more hair. But if you have any questions, you know where it reaches at. My email's there, okay? Our phone number, you know it all. You can call David, you can call me. And just feel free to give us a call. We'll be more than happy to, you know, go through this with you again. If you have a client that's going through a loan that, or buying a condo, just feel free to give us a call, okay, guys? With no further ado, because there's no more questions, I want to wish you guys a beautiful weekend. May God bless you, and may you have $1 million day.